It's like you continue to work on this business that is not ever getting over the hump and turning into something more. And so really it's some version of having a job that, if you might be a little bit better paying job than you would have had otherwise, or it might be a worse paying job than you would have had otherwise, but it's not really letting you escape from the rat race or the day to day. And we just stay with it for so long.
The Business Owner's Journey. I'm Nick Berry, and I've got real business owners telling their real stories, sharing their real lessons and strategies, so you don't have to figure it all out on your own. So this turned into a really interesting episode, and I think a really good one, and I may have to do this more often. I had a guest, Jessica Rhodes, who is the founder of Interview Connections. Before we started recording our interview, when she came on as a guest, we were having a conversation about my background, and she asked if I'd ever shared it, and I hadn't shared much of it. I don't hide it. I just don't talk about it that often, and I should. She says, well, why don't you let me come on and interview you? So she came on, and I mean, it's a great idea. So, and it's what I needed. She came on to the show. She was the guest host. I think that makes me the guest. And she interviewed me about my experience, my background, particularly with like some of the exits that I've had in the companies that I've owned. But we covered a lot of things. We covered successful exits. We covered unsuccessful exits. We covered like what to look for, green flags and red flags in operators. It was a great experience for me to be on the other side. And she was very purposeful with the information that she was trying to elicit, because we talked about there's value in this particular section of my backstory that doesn't get shared enough. But it was also great timing for me because, I mean, literally at the same time, I'm launching redesigned.business, and it's about like using my experience and the tools that I built to build my companies to help other business owners break out of some of the traps or avoid some of the traps that everybody tends to go through, the getting stuckness. So she helped pull some of that information out of me. I want to thank Jessica Rhodes she did a great job. I mean, you can tell she's a very natural. She's probably, I don't know how many interviews she's done, but she's very polished, well-spoken. She's fun, like an enjoyable conversation. And from my experience, because her clients are people who tend to be guests on my show and other shows like it, they do a really good job. So between my experience with Jessica and the secondhand experience in working with her clients, I would say you're in pretty good hands with Interview Connections. If you want to check them out, interviewconnections.com. And make sure that you check out redesigned.business and let me know what you think of this episode with Jessica Rhodes and I.
I'm Jessica Rhodes, your guest co-host today, and I had the pleasure of being one of Nick's guests on the Business Owner's Journey. And before we started recording our interview together, I asked Nick why he started this podcast. And part of what came out of his answer was his story of being a serial entrepreneur who has sold over a dozen companies. So I boldly invited myself to come back on the show, but this time as the interviewer, because I believe we will all receive a lot of value from hearing Nick's story. Now, the business owner's journey that most of us focus on is on operating and growing our business. I know for me as a founder, as an entrepreneur, that's where I spend my time. I'm operating the business, I'm growing the business. That's where my focus is. But rarely do we ever think about the fact that our business is an asset, and assets are something you can sell. Only about 20% of businesses that go to market actually sell, which means a lot fewer, they don't even go to market, so they never sell. So should you sell your business? Should you think about it? Why or why not? If yes, when? What does an exit look like? Let's find out by hearing Nick's business owner's journey. Welcome to your show, Nick.
Thank you. That's great. That's great. That's why you're here, because you would do that and do it so well.
Well, I'm honored to be here as your guest interviewer. One of the reasons as well, in addition to what I just shared, that I wanted to come back on and interview you is that I know that podcasters are always putting the spotlight on their guests. They're interviewing other people. I mean, that's what your show is all about. It's spotlighting business owners' journeys. And when I heard just the little bit that you shared with me about your journey, I'm like, you're audience really needs to hear from you. I think that you're like this. A lot of us, we need the story pulled out of us because it's our story. We lived it. So we're like, do people really want to hear this? What would be valuable? And so that's why I thought it would be really great for me to come on and ask you these questions so your audience could learn more about the guy that's interviewing all the people that they're listening to every week.
Yeah, I'm glad that you did, because I know that I'm guilty of maybe downplaying or understating or not stating some of the things that I've done. A lot of it maybe best of intentions with it, but regardless, like there's value in other people knowing more about the experiences. So it needs to be shared.
Yeah. And I think that as entrepreneurs, once we hit levels, like certain levels of success, it's normalized to us. Like it's normal for us. You've exited so many businesses, both successfully and unsuccessfully. And I'll ask you like how you define that it's normal for you. Like selling and exiting a business is more normal to you than those of us, including myself, who have never done that before and don't know what that experience is like. So let's start there. How do you define a successful exit versus an unsuccessful exit?
Yeah, I think that's a really important place to start, because it can look so many different ways. There are like I've sold businesses that, I mean, it may sound good to have sold this business, but if I had done that multiple times over, we wouldn't be here, right? Because that particular transaction, it wasn't a good investment. So it's important to be able to discern, what the difference in the good ones, the ones that weren't headlines, and then the ones that are, that's misleading to describe them as a success. So for me, I think the general definition for a successful exit would be like you're hitting your return on investment goal or whatever that is. You're getting your money back plus whatever on top of that. For me, there needs to be a market-based wage if there's a operating role of any type, getting profit from the company over the time that I was involved, and then being paid for the equity at the point of transaction. That was how I defined success versus unsuccessful. In the ones that I've talked about, there are 4 that I would call that meet the successful exit criteria, but I've had several dozen other businesses in my 21-ish years and exited almost all of the rest other than those 4. And that doesn't mean, so they may fail my success criteria, but that doesn't mean that it was necessarily a failure, right? Mm-hmm. So some of the ones who don't meet those 3 success criteria, we still like made our money back on those, mm-hmm. or made our money back. And in addition to that, made some profit. It's just that I feel like it would be very easy to paint a rosy picture around a number of exits that's not an accurate representation. But for me, what I wanted to do was say like, this is how many times I've done this and done it really well. This is the thing that like I can show you my experience, and this was what we were trying to accomplish. These are the ones that are the opposite end of the spectrum that went very poorly. This is what you'd want to avoid. And then there's everything in between, which is, maybe some of them were like better than others. Some of them definitely were better than others. But that's where a lot of entrepreneurs spend their time, is kind of like in this gray area between like the absolute winners and the absolute losers. A little bit harder to identify those maybe, but there's still plenty of value there.
So I would love for you to dig a little bit deeper there, because you mentioned to me, like when we were talking before this episode and kind of preparing for it, is that, you believe that a lot of most business owners are spending their time in the gap between a successful and an unsuccessful exit. So what do you mean by that? Are you kind of talking about like business owners who are exiting, or just like business owners in general are spending their time on things that would create an unsuccessful exit? Like, can you expand upon that? Because I think we all want to avoid anything unsuccessful.
Right. Yeah. So if it's in the group that was definitely failing, like that, that's that's made clear probably. What I was saying there was they spend a lot of time focusing on businesses that are going to stay in that, like maybe a good investment of time, maybe, or money, maybe not, but it's not turning into what they had gone into it aiming for. Mm-hmm. Right. So it's a business that So here's one that a lot of people are probably familiar with. Starting a business, I'm not going to take any pay, or I'm going to take like this below market wage for the first year, let it get off the ground or whatever. Once I hit this certain point, then I'll start paying myself. And then that point never comes. Right? Or maybe being able to pay your owner a wage, but never really actually getting anywhere with profit. It's like you continue to work on this business that is not ever getting over the hump and turning into something more. And so really it's some version of having a job that, if you might be a little bit better paying job than you would have had otherwise, or it might be a worse paying job than you would have had otherwise, but it's not really letting you escape from the rat race or the day to day. And we just stay with it for so long, right? There's the perseverance or the resilience or whatever. And I know that there is information out there now more frequently than there used to be about like, when is it time to just throw in the towel in this thing? So those are the type of scenarios that I'm talking about. Like the easy winners and the easy losers, it's easy to recognize them, but it's the ones that were like, but I just need to get over this. If you've been trying to get over that hump for several years, doing the same thing is going to get you the same result.
Yeah. So, I mean, one of the first things that came to mind when you were talking about that, like years and years ago, my business partner and I implemented Profit First, which was huge because it allowed us to plan for profit and to have separate bank accounts for what we're going to get paid as owners and what percentage of our income is going to payroll and operating expenses and things like that. That was a game changer. I don't know if you use Profit First or if there's another recommendation you have for business owners that are kind of like, they feel like they're constantly on the cusp, but they're never having that breakthrough to the point where it would be an obvious successful exit.
Yes. So I don't use Profit First, but I had come up with basically my own version of that for our companies before Profit First came out. So use Profit First. It's better. It's easier to adopt. Mike actually came and was a keynote at one of our conferences and did a workshop with a lot of our clients. Like that's a great system. But the magic to it is probably what you experienced, where if without a system like that, tendency is going to be to do something like what I described, where it's like, hey, I'll pay myself last. Like I'm going to take one for the team and I'm going to build up the cash or whatever. And you're starting to like build this habit of the way that you look at things, the way that you see this. And at that point, you're serving the business. And there are times where that's what you need to do. Like that, I get that. But if that becomes your only move, you're in trouble. And Profit First forces you to like break that paradigm and look at it like, okay, I'm getting paid. And then we're going to figure out how to make this thing work beyond that. Because if I'm not able to get paid at least something that's fair, I shouldn't be here, and I shouldn't like the timeline on this ought to be finite. Like we're only going to do that for so long. So I think it's beautiful in that respect.
I totally agree. And I've definitely, I've been in business for 11 years and my business partner and I have had those periods of feeling like we're working for the business and we're not being compensated appropriately. And it just creates this kind of a toxic relationship with your business because you're like, this is not an equal value exchange. And so it's so important to have those accounting methods and systems to make sure that it is that equal value exchange, that you're working for the business, but the business is also working for you and paying you appropriately. Because I do think that can be really dangerous for business owners to feel like, well, I'll just get the big payout one day. And so I'll sacrifice now. But then what if that big payout never comes? So on that note, I'd love to dive into some stories. You've had a lot of exits, so we're obviously not going to get to share every single one, but let's start with the best. Tell us about your most successful exit. Tell us just the story of that.
Well, I don't know. It's like having kids that we're not going to tell them that one's a favorite, even though one is. So there have been a few different versions. So, and I think that there are cool elements to each one. The most recent was like the company that I had for the longest and actually that I ran. The others, we had the portfolio company and there were operators in place. And so it was different in that respect, but a business coaching firm that we put together that had been around for since 2012 and just exited that at the beginning of last year. And so that's what kind of led to the business, the podcast, right? It's like, that was, that was the thing that had occupied the bandwidth on a day-to-day basis for the better part of the last decade. And then, we had a transition period after we closed the sale, but, all of a sudden I had a free time like I hadn't had in like well beyond that 10 years. Like it was 20 years ago that I had free time like this. So I'm like, what now? I'm going to do a podcast.
Yes. So let's dive into this story because I think this is perfect because this is what instigated the podcast, this free time post exit. So as a business coaching firm, 2012 was when you started the business?
Yes. That brand, yes. So we're doing like information products, mastermind programs, and things like that prior to that. That was going back to 2007.
Okay.
Then it evolved into Fitness Revolution, which was the company that I just exited, which actually was launched as a franchise. And we're the fastest growing personal training franchise in the world for several years. And then over the course, pivoted, turned that into got out of the franchise model and unwound that, turned into a license, which is what it still is, but delivering business coaching and branding.
Okay, got it. And so at what point in the business owner journey did you decide to take it to market? Was that always the plan? Was it just sort of like, this is the next step of this journey? Or was there a moment where you said, let's take it to market?
Yeah. So it was not as intentional as one should be with something like that. The way this came about is I had a former employee who I had talked about this with a few years prior. Not talked about it seriously. He was somebody that I just said, he had asked me one time, hey, do you think you're ever going to sell, or what's the big picture here? And I was like, and I don't know, somewhere along the line or in the conversation, I just said, if I was going to sell, you're the kind of person that I would want to have it because of these characteristics. And that was really about it. And then he left, had another opportunity, but he and I stayed in contact. And then he came back to me in 2023. He was like, hey, do you think we could actually have a serious conversation about this? Like, sure, let's do it. And so we picked up the conversation, and things fell into place probably better than one should expect as far as moving step by step. But yeah, it was a former employee. It would have been someone that if I was going to draw all this out, then I would have created a plan to for him to ascend to a role and then eventually become a buyer. So we didn't have that foresight, but we're fortunate for it to work out the way that it did.
Yeah. Yeah. That's so interesting. Because one thing about, and I don't know if anyone else experiences this, but for me, I co-own a business that's been around for 11 years. We have a good online presence. We're a real company. And so on a monthly basis, at least 1 to 2 times a month, I'm getting an email from some firm that's like, have you ever had it valued? And I just delete them because I'm like, who is this person? Was there any of that for you? When he reached out for that follow-up, more serious conversation, was there any question of just is he for real? Is this going to be worth it? Do I want to? Because now you got to reveal everything and there's got to be a due diligence process. So what were the emotions and the feelings that you had when he reached out about that?
So with him, it was pretty easy because as far as him being serious, I knew him well enough to know if he was going to bring it up, he was serious about it. And so that part, there were just a lot of things baked into that level of familiarity that you can you don't have to worry as much about. Yeah. There are other things that you need to consider more strongly too in those cases. So there's a factor about that situation that I think makes it kind of unique at that time. So I was burnt out or had gone through some stuff for more than a year. It was COVID hit and we were that group of people, that company and our team performed at our absolute best through the pandemic. It was it's one of the proudest things from my entire career. We had none of our clients closed permanently due to the pandemic. And that's like, there's nobody else in that space that I know of that could say that. And I'm really proud of that. And it's like, we got to this place that I don't remember. I don't think there was like a formal finish line, but somewhere along the way at like 2020, maybe 2, early 3, it was like, there was this finish line. And I was like, I think that's it. I'm not real sure.
Wow.
I was just toast.
Did you feel at that moment that you had just achieved the vision that you had set out? And then was there a lack of vision, or it was just kind of burnout?
It was, I just looked up and one day and was kind of like, I've been, my routine didn't change. Everything was the same. But I looked back and I was like, wow, I was really kind of like coasting for the last few weeks. Or, there was just I shouldn't say no. It was like this fog that was just, I was just kind of going at that point.
Like autopilot?
Maybe. Yeah. So it took me a really long time to figure out what was even going on. Like, I'm not totally sure. I mean, some form of burnout, but it, it wasn't obvious to me. It was just like, over this period of time, I just kind of, maybe lost some momentum or some conviction, like the fire was, there was enough there that you wouldn't realize like it's gone.
Right.
But it was not what had made me to that point, what had gotten me there.
Right.
So it wasn't obvious to me at first.
Yeah.
And that made it hard to realize that something had happened, and then made it hard to figure out, well, what, I don't think that it would have been reasonable for me to just like stop everything and just wait on something to tell me like, this is what's wrong. I had to keep the company going, and until I figured out like something, what is behind this? Why am I like, why is my motivation about 60% of what it was for 20 plus years?
Yeah.
So there was that. And toward the end of 23, whenever Justin, the buyer, came back to me, I'd started to like kind of get my bearings a little bit more, and I was getting clearer on kind of what was going on. And so I still didn't know exactly what I was going to do, how I was going to address it. But so there was that happening at the same time as him bringing this conversation back up.
That's really interesting, because something that, I mean, part of being somebody in the podcasting space and booking podcast interviews, I've listened to a lot of podcasts and I've listened to a lot of subject matter experts. And one thing that I've heard from people who talk about selling a business is that you don't want to try to sell a business when you kind of like hate the business, because nobody wants to buy something that you hate, energetically. And that makes it tough. And I've seen that, like I've witnessed that over the decade plus that I've been in business, and I've seen many entrepreneurs grow and decline and sell and all of the things. I've noticed the ones that waited till they were really burnt out to sell, they were going down the other side of the mountain versus being at the peak and, kind of being at that summit. So can you talk a little bit about that, both from maybe this experience and from your other exits, the timing? Like, let's talk about the timing of how people know, right? For you, it was just like, I was at 60% motivation, and talk a little bit about that.
So I think as far as going like over the peak and then it being kind of downhill, I wasn't on the downhill, but I was getting over there. So I think what was my thought process when it came, when the opportunity to sell came up, and I was still like, what's going on here, was more like, I'm not exactly sure what this, if this business is the cause of this or not. I don't feel like the business is the problem, but I'm just going to do something different. I'm just to that place where I'm okay with closing this chapter. I'm happy about it. It's a good opportunity, and that giving myself that kind of separation, I think, is going to be what I need to clear my head the rest of the way and figure out like what direction to go next. So I don't think I'd gotten to the place where I was like resentful toward the business, but I can totally see it happening. Yeah. I would say would be what probably would have happened had I gone longer.
Right. Yeah.
So the other instances haven't been anything like that, but they were more planned.
Okay.
So let's see, two of the businesses. So when we go back to 2007, and I'd mentioned getting started and doing the information products masterminds. So I had a business partner then, and we had kind of established ourselves as like the business guys in that space. And so we had a lot of creators at that time, but they weren't called creators. That wasn't a thing then. But we would have clients who would come to us and say, hey, like, I've got this idea, or I think I can do this thing. I have this business idea, but I don't know anything about business. I just know how to do this thing really, really well. And so, that happened, and we partnered with somebody, and then it happened again, and we partnered with somebody. And so basically we would go with a creator or a subject matter expert and like handle the business part of it. They could make their magic, and everybody won. And before you know it, we had, I think at most 8 operating brands at one time. Had our management organization running that. And so after a few of these partnerships, it wasn't an intentional strategy to begin with, but once we had people who were very good at what they did, who already were established, coming to us saying like, hey, I've got this thing and I can crank it out and I can get a lot of attention for it, but I need somebody to build the machine that lets me just do that.
Yeah.
That's what I'm good at.
Mm-hmm.
So then I realized like, okay, this is a strategy. This is our thing. So from there, these partnerships, we would be more intentional about saying like, look, this is probably going to be how far this goes.
Okay.
Right. So we had the two that I mentioned were, had slightly different criteria, but in essence, they would come and say like, look, I want to do this thing. I can do this really well. I'm willing to give up X for it, but I need it to be kind of like this, right? Like, so one of them was like, hey, I can only operate this part-time.
Okay.
So, and to me, that's usually a red flag. Like, I don't want to do hobbies here.
Right.
But he was a very serious person, and serious, like earnest, committed, and convinced me of that, and demonstrated to me like, look, I can do this in just a few hours a week, and here's the value we can create. And so, okay. So we did that. And out of a part-time investment on his part, within a few years, I mean, he had a multi-6-figure exit, like for his part of it.
Yeah.
So like, that's not bad for being able to scale something on your own terms like that. Another was a creator who we were involved in the manufacturing, warehousing, shipping of a retail product. And, it's kind of similar, like husband, wife, family, and he's like, I've got this stuff, I can sell a shitload of it. And, but I needed to like no longer be a burden on my family. So we got to figure out how to replace the workload that my spouse has taken on. I mean, and that's totally reasonable, right? But it's like, man, how do they're immersed in this. How do you dig them out? But that was our thing. It's like, okay, part of the architecture here has to be, we got to extract him, make sure he can still do all of his things, make sure that the business can grow, continue to grow and produce the way that it has. But we've got to basically give it artificial arms and legs, or, replace the real ones with artificial. And so, those nuances, I guess, or criteria were things that we were able to use as kind of milestones. So from the very beginning, we could plan for when we hit these, then it can be a triggering event. And in some cases, those are triggering events for equity transfers or other types of compensation. Sometimes it was a trigger for, now we have the option to buy or sell. So we could buy them, they could buy us out, one or the other. Or we could stay the same, but someone has the option to make a choice at a time. So those I would describe as like predetermined. That's
so interesting. So you've sold companies, you've acquired companies, you've invested in companies. I love the range. Tell us more about the triggering events. Are those predetermined as business owners, or is that like a terminology that's kind of well known in mergers and acquisitions? Like what is a triggering event?
Yeah. That's well known. That's a
Mm-hmm.
thing. Like, we didn't come up with that. It's just establishing, like, we're going to do this. It's putting something on it that's going to give an opportunity for closure. So it's not going
Okay.
to go indefinitely.
So it's that way as multiple business owners, equity shareholders. It's not like somebody feels like selling. It's like, no, we all agree that when the business hits this much profit or this happens, then we're going to have a conversation about what to do next. Is that
And
kind of what you're saying?
that's exactly what I'm saying. And
Okay.
one person has a choice. That's going to
Mm,
matter. Right. So we might all get to vote. It just depends on
yeah.
how it's structured. But ultimately, the buck's going to stop somewhere,
Yeah.
because we're not going to sit here and thumb wrestle over it.
Mm-hmm. Right.
And avoiding that I feel like conversation is the thing.
Yeah.
You want to have the I feel like conversations along the way to keep your finger on the pulse.
Yeah.
You don't want those I feel like conversations to be your decision conversations.
Right, right. As somebody who invests and has invested in companies and invested in especially founders who are just really good at their thing, but maybe not necessarily operating the businesses, let's talk about red flags and green flags. Like, what are the green flags, things that are like, check, 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 that's a great opportunity. And what are the red flags where you're like, maybe it'll work, but like, that's a reason to dig a little deeper.
Yeah. In the founders themselves.
Yeah, like when you were as somebody who would invest in a percentage of equity of somebody's company, like these examples that you were just sharing,
Mm-hmm.
whether you're acquiring the whole business or acquiring a percentage of it, like
Yeah.
what are those green and red flags?
Yeah. So what I would look for out of somebody right now is they have to have some idea with some conviction.
Mm,
And there needs to be some evidence of that. I would prefer traction, like some proof that they've been able to get some momentum, make some sales, but they have to be able to speak about that thing pretty clearly and articulate like where the boundaries are.
what do you mean by boundaries?
They can define their lane really well.
Okay,
Like,
like
what
their
is it
role in
about
the
this thing?
company,
What's that?
like their role in the company or in the market.
Both.
Okay,
Yeah.
got
If we're investing in the business, then it's going to need to be both.
it.
But typically that person is going to be able to speak really well about the problem that it solves in the market. And they'll be able to say, it's like this, except for, or it's like that, but not with so they know what the edge is.
Okay, got it.
Another thing, I mentioned this already, is the earnestness. And that is like become so much more apparent to me in the last 4 or 5 years. It, you know, solopreneurs in particular are, to each their own, right? Like, not everything has to be, you don't have to live and die by it, maybe the way that I would, or that somebody else would. You can run a business and treat it like what I would call a hobby, and it do well, and it does however you want to define that. That's okay. What I'm looking for would be someone who is committed to the degree, like they're going to do what it takes.
Mm-hmm.
And they know that that's going to change over time. And it may change day to day some, and sometimes it's going to be really hard. Sometimes it's going to
Yeah,
suck, but they're committed to it, and it's going to take what it's going to take. They're
yeah,
not going to show up with the sense of entitlement over, because they are the business owner, or because they read an article about, you shouldn't have to grind. Like, there's no like, hey, I'm not trying to grind anybody down either.
yeah.
Right. I don't think that has to be the way, but sometimes you may have to go into that mode. But
Yeah,
go ahead. Sorry.
no, that's okay. This is great. Something that my mentor I've heard her say a lot. Her name is Melanie Ann Layer. She always says, basically it might be hard, it might be easy. Either way, I'm in. And that
That's right.
mentality has been really, really great because as a founder, an entrepreneur, a business owner, right? Sometimes when it's really hard, it's like, wait, this shouldn't be this hard. I'm the business owner. But you know what? Sometimes it's hard. Sometimes it's easy. Either way, like, how committed are you to the goal? And I want you to keep going, but I want to interject because I like to just really make sure the listeners are looking at this. Whether you plan to sell your business or bring in an investor or not, you will run a better company if you are taking these lessons to heart. Because when somebody like an investor is outside looking in on your business, they're just looking at it as a business. Like, I've got this book right here called Run It Like You'll Sell It. Like, there's just so much gold in looking at what does an investor look for, because when you can run it like somebody wants to buy it, you'll just run a better business. Like, learning
Exactly.
about this stuff has made our business so much better.
Right. So I really like what you just said there about if you, one of the things that you can do to be a better thinker, a better leader for your business is an exercise just thinking about how someone else on the outside who knows what these things need to look like sees your business.
Mm-hmm.
And if you can't put yourself in their shoes entirely, think about when you're going to pick a stock. You're going to pick a stock from a set of acronyms, and they're going to have some either green or red numbers beside them. And that's all you know about. But that's enough for a lot of people with some context, like that's all that person, that outside expert is going to see your business as, right? So I'm not going to say they don't care about more than that. They may very well, but there are measures, there are indicators that matter, and you need to make sure that you know what they are, and you need to make sure that they are showing up.
Yes, absolutely. And also what you were saying before about conviction and being able to clearly define your role, both in the company and in the marketplace, that's going to make you better at sales. That's why podcasting is great, because the more you talk about what you do and the value you bring and the problem that you solve and how you're different, you're just going to be so much better at selling your product or service. So I think that this is all good. So let's keep it going. What else do you look for?
So earnestness, clarity on the problem that they're solving. And then I think the next thing would be, as a leader, like the way that they think about things. So their critical thinking, communication. Are they somebody who leans into feedback, or are they somebody who shows up with all the answers? Because like that is a leadership style, I think, and it works in some instances, but you don't need me if you don't have all the answers. So what I do is help design the business, the machine, but also like coach the leader through their evolution, so that I'm looking for somebody who is coachable, who's leaning into those things and trying to become a better thinker also.
Right.
And I feel like those criteria they're not exclusive to me for sure. I feel like those are almost universal criteria for someone who's going to do well growing a company.
What are some aspects of a business that you as an investor, like if they're not going well, the things that you're like, oh, I could fix that, because maybe not everything in the business is like perfect, but like what are the problems that you feel like are easy for you to solve if a founder is not solving that?
Well, I think that what I just was describing as like the architecture of the business. There's some things that I feel like business owners take for granted. So I was just having a conversation this morning about like an operating cadence. And so to me, that means like getting everybody kind of in this cadence, everybody in the business, in this cadence of like, we operate on these like yearly, quarterly, monthly, weekly cycles, right?
Yeah.
And so everybody's always thinking, if we're having a conversation and like, okay, you're going to give me this thing. And without saying it, we both recognize like it's kind of assumed that that's either going to be within 1 week or it's going to go to our next like big meeting, whatever that is. But that's us being in lockstep with our operating cadence. And I think that is so valuable for a company to keep them like pushing toward their future, and they underestimate it. So, I mean, it's really like you don't hear people talk about it, so they're doing without it. So that's the kind of thing, like if you let me follow you around for a day or two, and I can probably tell you where you've got things that are going on that are chaotic around you and you're used to it, that could all be like a headwind.
Yeah. There's a lot of different operating systems. Like I know there's EOS. We use Scrum and Agility. So it's the same thing. Like there's learning cycles. So there's daily stand-up meetings, and then there's monthly retrospectives where we're purposely looking back at the previous month. And then we also use an experiment tracker. So if we're going to try something different, we put it on a spreadsheet, we track it, we say, what's the criteria for stopping this experiment? What's the criteria for changing? And so we did that. We were experimenting with a certain type of bonus to incentivize pay in fulls. And so we tried it and our pay in fulls went down. And I said, we are stopping this experiment. It is not working. Let's move on from this. In the past, before we learned about this, we would just make a change because we thought it was a great idea, and years would go by, and then we have no idea what changes were causing the results, either positive or negative. So I think that's so important, is to have those systems in place.
Yeah, I like that.
Yeah.
I think as you're talking about that, another thing that comes to mind that works really well, like I think it's easy for me to recognize if they don't have a strategy in place.
Yeah.
So I think I'm really good at diagnosing. Like I can smell smoke. And so if I smell smoke, I just need to like follow it and I'll figure out what the problem is. A new client just a few weeks ago, I was having a conversation with her, and it's like there was something, she seemed really clear on who she was going after, and she's super clear on what she does. There was something like, I don't remember exactly. I wish I had it. There just a couple of words that jumped out in this conversation that like, there's something like the sense making going on here was I was firing. And so I dug in, and really all she was doing was she had like commingled to multiple audiences, and her offer, she'd kind of like expanded it, had a little scope creep to try to account for that. And like, she's in it every day, she didn't realize it. It had just kind of evolved, but I was able to pick that out just by smelling the smoke. And so to me, that's a strategy thing, being able to sense you've kind of balled up multiple offers and markets here, and you're botching your strategy in doing that, right? So being able to help her disentangle those things.
Yeah, I think a lot of entrepreneurs are visionaries, and a lot of visionaries get a feeling for a good idea and then they just run with it without like staying the course of the previous idea, because some things take a long time to refine. And I don't know if you agree with that, but it's like people just want to like jump and do something different. And it's like, well, wait a second, like with the scope just kind of creeping out and merging audiences, it's probably like the littlest thing, but you saw that, you smelled the smoke.
Right. So I think you're exactly right about what they do. And that's a good thing. So the way that you counter that is you need to have, like, that's her strength, is being that way. I don't want her to be different.
Right.
The way that she counters that is she needs to make sure that she's got other pieces around her that will catch it when something starts to smoke. Or if she's like really out of bounds, who'll kind of like, hey, this totally misaligns. Like, we don't even need to start doing this. So, that if that's a strength for a visionary like that, let's let it be a strength. Let's fan the flames.
Yeah.
But let's also put some things into place. We can wear a safety harness, right? Like that. So yeah, let it be their strength, and let's ride it and not hold them back. That doesn't mean they're going to be right about everything. We're going to put some safety measures in place, and collectively the whole should be greater than the sum of the parts.
Yeah. What are your thoughts on business valuations? I'll leave that open-ended, but have you, like, do you get your businesses valued? Like, just talk a little bit about that.
So my thoughts are, generally it's not you don't really need one until you need one.
Yeah.
I've never bothered, other than as a part of a sale. And, I think this is another conversation I was just having also, like getting a valuation done. I don't like the person who's going to do the valuation is just probably, if they're unbiased, it's going to be a CPA or somebody like that. And they're just going to math it up, and they're not probably giving you what you're actually looking for. Or if it's a broker, they're trying to sell a business.
Right.
But I don't know of really better resources. It's going to be situational as to what you should do, but most situations you don't need one. And for ours, so what I did was we used the same formula for the valuation every time. We had it done the first time, and it applied for every exit.
Okay.
Thankfully, because that's just, when we were talking earlier about making things, trying to like extract the feeling part of it and make it as fixed or like rigorous, I guess, as possible, that the formula for evaluation is a thing that could be really contentious if you're sitting on opposite sides of the table. And so, but we were able to avoid that because we had one, it was been used. There was no reason for anybody to question it. That's not always the case for people who are trying to exit, but that's where there are much more sophisticated succession planning and exiting strategies or processes than what I've done.
Yeah.
Right. So if your business you're building it for your retirement, which you should be building it with the exit in mind, because it's going to make you run a better business, which is what you said. But also that's the prudent thing to do. Like, you're building this asset. So you probably have done that with your retirement account. Like, you have a plan in mind for that somewhere down the road. So you need to treat your business the same way. And if it changes, that's fine. But planning with that end in mind, and then like reverse engineering from there. And that's where you can account for at what point do we need to be getting it valued in order to get it to a market, to find a buyer in a reasonable time frame. What are the things we need to do before that? Like, what are the markers that will go into the valuation that we need to make sure we have like really emphasized?
Yeah.
And that's what I would tell anybody who, if you're not under the gun, if you're not trying to get out, or if it's not just like this kind of opportunity that came up like it did with me, you need to find someone who does succession and exit planning and talk to them about it, because they can tailor some of this stuff a little bit more to your situation and say, okay, this is how someone in your shoes typically needs to do this. This is what you need to consider.
Yeah. Wow. There's so much value in this episode. Like, you have shared so many amazing pieces of advice and wisdom. So how can your listeners work with you? Like, if they're like, I want Nick to actually look at my business and coach me through everything that you're talking about, like, how can your listeners work with you? You mentioned you have a client, so I take it people can hire you to coach with you, or tell us about that.
Yeah. So since I exited and I was just doing the podcast, and then I had a few people get in touch with me that I knew, and so I've done some strategy work with them. But it's been about a year, and I've just recently decided I'm going to actually start doing this thing again, and I'm going to do business design. So it's kind of bringing the architecture angle to it a little bit more. It's kind of, I think there's this sweet spot between this like lifestyle hobby concept and the like a templated, more traditional business. There's room to operate for those subject matter experts, or even the entrepreneurs like the ones I mentioned. I'll be doing business design and coaching. If you want to get in touch with me about it, my website, nickberry.info. But I'm happy to talk about that stuff and help. So one thing that I think I maybe am a little unique, if I can't help you, I'm not going to try to convince you to do something you shouldn't. What I want to do is understand your situation. And if I need to advise you in a way that steers you in a different direction, that's cool with me.
Yeah.
I'm really big on understanding what you're trying to accomplish. And I don't mind telling you what I think is in your best interest, even if that doesn't involve me. So if you're interested and want to have a conversation, like, I should be pretty easy to handle.
I love that. I'm the same way in my business. That's why I call my calls consultation calls, because it's really just to see if it's a good fit. And I think that anyone listening to your podcast, anyone listening to this episode that's having some light bulbs go off and thinking like, what is the architecture of my business? Or, you might want to sell one day, or bring in an investor, or just have a plan for whether it's 5 years down the road, 10, 15, 20, like one day you're going to want to retire. Like you will. I know every entrepreneur's like, I will never stop working. And like, maybe like my dad just retired. He still coaches like 5 clients. He just has like a few days a week. He's still coaching, but he did retire and he did sell off one of his businesses. And that succession planning is so, so important. So I highly encourage everyone in your audience to reach out to you to see if it would be a good fit, because you clearly have so much experience, so much knowledge and expertise around what investors are looking for. What are the green flags, the red flags, how to plan all the different scenarios. I think it's awesome. So thank you for having me on to your podcast to interview you all about your story.
Well, thank you. You did a great job.
Thank you.
I really do appreciate you handling this with me, and maybe pulling some things out of me that I've not done a good job of getting them out and sharing them in the past. So thank you. This is what I needed.
And I think that's, again, why your listeners should reach out to see if you can help them, because I think the fact that you, Nick, aren't as like, look at me, like, I think it took me coming on and like pulling it out of you you are such an expert and you have such great experience, and it's not all smoke and mirrors and great marketing. It's like, no, you actually have so much business ownership and operating experience and investing and exiting that if people need your support, they should reach out. So
yeah, because I'm happy to share it. Like, I'm happy to give that advice. Sometimes I just have to be forced to tell people that I have it. But
and I'm happy to be that person.
We've made a great team. I like this. I think there's something here.
Yeah, I love it. Well, thank you for having me on. If anyone wants to check me out, my business is interviewconnections.com. And so you can come say hello to me, but reach out to Nick for sure.
Absolutely. Thank you.
Thank you so much for listening. If you found the show valuable, you can say thanks and show your support simply by taking a quick second to like, share, and comment on the show. You can also find more information about each of my guests, all of the resources from the show, and myself at nickberry.info/TBOJ.